Hi, class. We're going to look at exercise 3.2 here, preparing the cost of goods manufactured schedule and calculating the cost of goods sold for a manufacturer. So, as the question here reads, Hainong Man Inc. has the following data from their books for the year ended December 31st, 2018. Based off of all this information, we're going to go ahead and again prepare a schedule and calculate cost of goods sold. Just, to kind of back up, and the difference here, this chapter is about the differences between a merchandiser and a manufacturer. Just to reiterate, the biggest difference, of course, is that a manufacturer actually makes something and then sells it, whether they sell it to a merchandiser, if they sell it directly to the end consumer. That's kind of beyond the point. Whereas a merchandiser just sells something. They buy it from a producer, from a manufacturer, and they sell it to an end consumer. That difference in business strategy, in the type of business, the industry you're in, obviously is going to manifest itself in many ways within an organization. For our purposes, it does so in the reporting, both external reporting as well as internal reports that are generated, in this case, this cost of goods manufactured schedule. So if we look at the schedule, a couple of things I want to point out here. First thing right off the bat is the heading. I know it might seem like a small detail, but it's imperative that you have the proper heading, especially the time period. Certain headings, just like for your financial accounting courses, certain headings have certain time frames or timestamps or dates on them. These are internally used only, so they're not having to adhere to GAAP, financial reporting frameworks, or anything like that, but they're still used for information purposes. If I'm someone that did not create this report, and you were to give it to me, it should inform me, what is the time frame that I'm looking at here. In this case, for the cost of goods manufactured schedule, it says for the year ended, obviously, December 31st, 2018. That's important because it gives that context to the reviewer or the user of this report. Excuse me. So the starting point is, what is our work in process inventory as of the beginning of this reporting period? Work in process inventory, remember, that's all the inventory that is not 100% complete as of the day, in this case, January 1st of 2018. Then we're trying to figure out how much each element of a product costs us. How much did we incur during the year? So you'll notice the next sections of the report, we have direct materials, we have direct labor, and we have manufacturing overhead. And we just go through that thought exercise for each cost to determine what was the amount of material used, what was the amount of labor used, what was the amount of overhead incurred during the reporting period. The most complicated of the three, obviously, is going to be direct materials because it is inventory. So we do have to track and reconcile. So our starting point in determining how much direct materials was used is the raw materials as of the beginning of the year. So per the question, we had $3,000 worth of raw materials as of the beginning of the year. Raw materials, remember, those are materials that are going to be used in production, but they have not been requisitioned. They have not been started to be implemented into the end product. They are in their raw state. So we started out the year with $3,000 worth of raw material inventory. During the year, we purchased an additional $15,000 worth of raw materials. So that means for the entire year, we had at our disposal $18,000 worth of raw materials inventory. So obviously, what does that mean? The most we could have requisitioned and used in production is $18,000 worth of raw materials. We had $18,000 at our disposal. We ended the year with $4,500 worth of raw materials on hand. Again, these are inventory accounts, so they are balance sheet accounts. So we do need to do these counts so we know how much we have on hand at specific points in the year. As of the end of the year, we have 4,500. So if we had 18,000 at our disposal, we ended the year with 4,500. That means, and you can see the formula there by double clicking, we used during the year $13,500 worth of materials. In this case, we're going to assume they're direct materials. Direct labor is the most straightforward. That number would just simply be given. And you would look through your supporting documentation, time slips, direct labor control account to see how much labor was incurred during the year. And that will be elaborated on later on in the course. Manufacturing overhead, well, this is where we tally up all of those indirect costs to production. Indirect materials of 9,000, indirect labor. So that's, maybe your supervisor or janitorial staff or whatever the case is, was 17,000. Factory depreciation, notice the keyword there being factory. If this said office depreciation, it would not be included here because that has nothing to do with production. Factory insurance, same thing. Factory rent, all of those, the keywords there are factory. If it's indirectly related to the production facility, to the production process, but it's not identified in the end product, like direct material, or tracked directly, like direct labor, then most likely we would qualify it and classify it as manufacturing overhead. Production supervisor salary, factory utilities, factory property tax, you add all of that up, we incurred $302,175 worth of manufacturing overhead for the year. So our total manufacturing costs for the year is the amount of material that was used, the amount of labor that was used, the amount of overhead that was incurred. We incurred $390,675 worth of material, labor, and overhead. That was added to the production process essentially. So we started the year with a value in work in process of $27,500. We added to it another $390,675 of material, labor, and overhead. So the total cost of work in process for the year was $418,175. So that's how much direct material, direct labor, and overhead went through that account during the year. Now, to determine how much was actually manufactured and turned into finished goods, in other words, our cost of goods manufactured, we have to compare this total of how much went through to the ending balance in the work in process inventory account. The difference between the two, 392,625, you can see the formula there. That's the amount of goods that were completed during the year. So $418,175 was the most we could have completed during the year, the most our cost of goods manufactured could have been. However, we didn't convert all of this to finished goods. We converted all of it except for this $25,550. So that's why we're going to subtract the two. Our cost of goods manufactured, $392,625. So that is the amount that would be transferred from work in process inventory. And now they're no longer work in process because they've been completed. They now become finished goods inventory. The second part to the question is now, okay, we know how much was completed during the year, how much finished goods we had available, or added or completed during the year, I should say. What was actually sold? Because ultimately, we're in the business of not making inventory. We're in the business of making it and selling it to turn a profit. For cost of goods sold, your formula, it's in your textbook. It's in this document as well. It's beginning finished goods inventory plus cost of goods manufactured, which we just calculated here, minus ending finished goods inventory. So if we go back to the question stem, we can see finished goods inventory at the beginning of the year was 67,000. Finished goods at the end of the year was 59,000. So before we get to the answer, I want you to think through the logic there of what is happening. We started the year with $67,000 worth of goods available for sale. That's what finished goods inventory represents. We ended the year with $59,000 worth of goods available for sale. We completed $392,000 worth of manufacturing of finished goods. So if I were to ask you, did we sell more or less than this cost of goods manufactured amount? In other words, we completed $392,000 worth of goods. Did we sell more or less than that? I would be able to tell right away because I can see my finished goods inventory balance decreased over the year, meaning I sold more units than I produced. And because of that, my cost of goods sold amount should be higher than this cost of goods manufactured amount, this 392,625. And in fact, it should be higher by the difference, the 67,000 less the 59,000. So that is what, $8,000? So I should know my cost of goods sold in this instance because finished goods inventory levels decreased by 8,000 during the year. My cost of goods sold is going to be 8,000 more than my cost of goods manufactured because I sold $8,000 worth of goods more than I produced during the year. And lo and behold, if you look at the formula and the answer here, that's exactly what we get. If you double click the formula, our beginning finished goods inventory is 67,000. We add to it our cost of goods manufactured, which is the 392, and we subtract out the ending finished goods inventory of 59,000 to get cost of goods sold of 400,625, which you can tell is $8,000 more than our cost of goods manufactured. And just to confirm it for you, for any skeptic out there, lo and behold, again, $8,000 difference. That $8,000 difference matches the difference between my finished goods inventory at the beginning of the year and my finished goods inventory at the end.